despite the markets being at their all-time high, then there is still a lot of discounted dividend stocks out there. And in today's video, then I am going to be talking about 3 heavily discounted dividend stocks that I do believe could be the perfect pickup for your portfolio. But before we get to those, then please leave a comment below and let me know which stocks you're looking to buy at the moment. It is always very interesting to hear what you guys are looking at as well. So moving straight to the first one on my list. And here we have a real estate company, and that is VICI Properties, ticker symbol VICI. And VICI is a very unique REIT that owns some very iconic buildings in Las Vegas, such as the Caesar Palace, New York, MGM Grand, Mandalay Bay, and so on. And VICI is basically one of the world's largest experiential real estate companies, with a portfolio consisting of very unique assets within gaming, hospitality and entertainment. And if we do jump over here, well then we can see that VICI has not been performing that well in 2024, and their share price is right now down by 7.62%, and that is a pretty big loss. And they are right now trading at a forward price to FFO ratio, which is sort of like the equivalent to a PE ratio, but for REITs, of 11.6. And the performance of VICI is not looking that good, but I do think that this presents a great buying opportunity. And if you have been looking for a high cash flowing asset, well then VICI might be the perfect pickup. And the reason for the high decline in the share price is primarily due to the high interest rates. That is making the market conditions for REITs very difficult. And you will see that most REITs are actually down during 2024. And the reason for this is because real estate companies like VICI, they basically take on debt and borrow money to buy more properties, which is basically how they grow their business. But when the interest rate goes up and stays up there for a long period of time, exactly like what we're seeing today, well then it does increase the cost for REITs, and that does hurt their profitability, and that does of course have a negative impact on their share price. But let's take a look at the dividend stats for VICI, and we immediately see why I really like this company, as they currently have a dividend yield sitting at 5.8%, and that is really great to see. And they have a payout ratio sitting at 66%, which is also really nice. And they have a 5-year growth rate in their dividends of 7.6%, which is also really good when taking into consideration that they already do have a very high dividend yield. And they have been increasing this dividend every single year for the last 5 years in a row. And moving on to the second company. And here we have one that probably doesn't need much of an introduction. And that is the Hershey company, ticker symbol HSY. And this is a company that I did actually talk about a couple of months ago, and since then it has dropped even more, and that just makes it an even better buy today than what it was back then. And looking at their share price, well then we do see that Hershey is actually up by 1.3% during 2024. And if we do zoom out and look at the last 12 months, well then we do see that they are actually almost down by 21%. And that is a big drop in share price. And they are right now trading pretty close to their 52-week low as well. And one of the main challenges for Hershey has been the rapid increase in the cocoa price. That does have a big impact on their production costs. And whenever the production cost increases, well then does the profitability of course decrease. And that is a problem. However, I do really think that the main problem for Hershey has been the rapidly increasing cocoa price. And I don't think there's anything wrong within the company or anything like that. I do think that the big problem they have is the cocoa price, and that is hopefully going down again. But due to the decline in the share price, then does Hershey right now have a dividend yield sitting at 3%, and that is actually almost 44% above their 5-year average, which means that Hershey right now is a really good buy when looking at their dividends. And looking at the rest of the dividend stats, well then it basically only gets better, as they do have a payout ratio coming in at just 49%, which is absolutely perfect, and they do have a 5-year growth rate in their dividends sitting at 12%, which is really nice. And they have been increasing this dividend every single year for the last 14 years in a row, which is really great as well. And lastly, on today's list of discounted dividend stocks to buy right now, we have the medicine giant, Pfizer, ticker symbol PFE. And this company has been through a lot over the last 4 years. All of the sales that was related to the COVID pandemic is basically gone, and we are back to the old Pfizer, which might not be a bad thing. However, if we do look at their share price, then we do see that Pfizer is basically breaking even for 2024. But if we do zoom out and look at the last 12 months, Well, then is Pfizer basically down by almost 20%, and they are also trading pretty close to their 52-week low. And getting Pfizer for under $30 a share is in my opinion a really good buy, as it is a very solid company with a very strong pipeline of products that is coming to market within the next couple of years. And in terms of dividends, then is Pfizer looking really good as well, as they do have a dividend yield sitting at 5.81%, and that is almost 40% above their 5-year average. And they do also have a 5-year growth rate of 4.5%, and they have been increasing this dividend yield every single year for 13 years in a row. And that was basically the top 3 discounted dividend stocks to buy right now. Let me know in the comment section below which stocks you're looking to buy at the moment. See you guys in the next one.